And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep for Wednesday, March the 15th. Beware the Ides of March. My name is John Hoagland. It is not Caesar nor Brutus. Thanks for trusting me with your time. As always, we're going to seek accurate context, think about risk management, and always remain patient in our trading this morning. So we got some numbers coming out later on, as well as the numbers we've already seen this morning. Excuse me, my goodness. Core PPI, New York Empire, state manufacturing, all lower. Retail sales month over month, a little bit lower. The numbers, I think are encouraging for a slowdown of rate hikes, but the market isn't really viewing them that way right now. We are seeing the markets on the lows here, at least in the S&Ps. We're still waiting for the business inventories and housing market index at 9 o'clock Central and 9:30. Of course, the EIA petroleum status report due. So we've got U.S. stock futures heading lower again as worries about a potential banking crisis persist. Also, a little bit more uncertainty in the world after the drone situation over the Black Sea yesterday. The Fed is expected right now to raise rates by 25 basis points next Wednesday. But of course, they will be watching these numbers for the next week here very carefully. Just going to see how the market reacts to the numbers today. Kneejerk was to the upside, putting in a new overnight low as we speak here in the S&Ps. And we're going to have to see how this plays out. Remember, man, we can't control. We are in the market's environment. The market isn't in our environment. So we got to remember, trade what we see and manage risk always. Crude prices continue lower after the API announced just a small 1.15 million barrel boost yesterday. The EIA is seen to be releasing this about the same number today. Of course, we'll have to see how that goes, but we've got crude oil down at $70. Isn't that where the White House said they were going to start to replenish the petroleum, the Strategic Petroleum Reserve? We'll see if we find some support there, maybe. We'll have to see. We've got the VIX up about 16% this morning, 27.54. Yesterday at this time, it was 25.66. The dollar index higher this morning, almost a full point of 104.56. Yesterday, 103.54. So yes, a full point higher on the dollar. And the yield on the 10-year down slightly from the close yesterday, but still higher than it was yesterday at this time. Currently 3.63 last I checked, and 3.58 yesterday at the same time. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome. Make sure you subscribe to our YouTube channel so you get a notification when we do go live. Today is Wednesday. We are going to have group coaching at 12:30. I just put the link in to register into the chat. After that, it's Make Hoag Money time again, the afternoon session, starting at 2 o'clock. We'll look forward to seeing you there. Next link is the link to register for that. Come and see if we can't figure out a way to make me money today. So we're going to see what we've got going on. As always, I got to say good morning to everyone. Brian is first one in the room, winning the prize this morning. Stephen, good morning. Shaw, it is funny the way the markets are responding to a lot of this information lately. Bad news is good news, but but too bad is still bad. Happy Wednesday to you as well. Good morning, my brother Rick. Love you. Kevin, always good to see you. Jason Bartles, good to see you. Kevin, that's very nice of you to say, and that's my goal here. And I can't tell you how much I enjoy talking to traders about trading. You guys do probably more for me than you know, probably more than I do for you. Doing these broadcasts or these preps or whatever, it's such a great accountability thing for me. If I don't prepare myself, I don't know what to say, don't know what to do. You guys keep me doing my homework very, what would I say, religiously? Is that the right thing to say? I'm not sure, but thank you all again for joining me. And Kevin, thank you very much for the kind words. Christopher, good morning. Dan, John, Urban Cowboy, Dan Trader, really need to. Rally sweater is on. I told you I was going to keep this on all week. I'm not going to be here on Friday, so you guys are on your own on Friday, which, by the way, is quadruple witching day. I'm not going to be playing. I'll be out of town. Vince, good morning. Flak jackets and helmets, right? Haggle Matters, good morning. Ron Merlot, it's good to see you, Mr. Merlot. You and Veronica Corningstone have taken some time off. Well, welcome back. It's great to see you back, and thanks for popping in and saying hello, even if it's just for the day. It's great to see you. Hope things are going well for you. Chai T, Will R, the rooster crowing this morning. Alejandro, Joe, good morning. Travis, Denise, good morning. Naztec, JD. Range expansion is crazy. That's watch the VIX, man. VIX is gonna tell you that range expansion is likely. RCU, good morning. You'll take a deep breath, right? Khalid, Kevin, count your crises, right? Seems like more and more is happening just about every minute. And I was saying that on Monday about the markets because it seemed things were changing by the minute on Monday. We've settled down a little bit. I think, we're a little bit more range bound, and we'll see this on the charts shortly. But Ground Zero, good morning's rain. EIA out today saying world awash in oil as Russian sanctions haven't succeeded in denying oil output or exports from them. I did read that here just before the prep. Thanks for putting that in, Kevin. Ed, good morning. Steven. Fred Decker, good morning. Stocks COVID-19. Baby Blue. I don't know if I've seen that name before. Thanks for popping in and saying good morning, Steven. Good morning to you, brother. Sarah Hall, as always, prayers and love to you as well. Rob T, always good to see you. Ashok, Sujit, Anissa, good morning. Ryan, Fred Decker, thank you very much, Fred and Kevin. You guys are too kind. Good day. Like the Zeppelin picks in the background. Gave me confidence in your opinion. Yes. Always been a big Zeppelin fan. So cryptocurrency. This right here is an unused ticket for a 1977 Led Zeppelin concert at the Chicago Stadium. Was when Plant's son passed away, and they canceled the last six shows of the tour, so that ticket went unused. It wasn't for me. I was a little bit young probably to be going to concerts. I was in, I think, 8th grade. I think I went to my first concert the year after that. That was REO Speedwagon, which could never be confused with Led Zeppelin. But I keep that because the face value of that ticket is $10. $10. $10. That's it. And then I got my guy, Croce, Taylor. I had a few. I'm going to change them up here shortly, soon. But got to keep my guys with me. So, all right. Lee Trevino. My goodness. We had Lee Trevino here with us this morning. It's always a pleasure to see you, Mr. Trevino. Stephen, good morning. Chris and Simsum. I hope I didn't whack your name too much there, Kiri. Kiri, good to see you. Mario speaking. No kidding. Yours first concert as well, huh? All right. Shaw, don't admit to going to REO Speedwagon. You're losing street cred. A friend of mine I was hanging with and was trying to start a band with wanted to go see him, so that was the first one. All right, we're going to jump into the charts here. Remember, group coaching, make Hogue money, and the reflection at the end of the day today. Tomorrow morning, we're doing make Hogue money and, well, doing the prep and make Hogue money, and that's going to be it for the week. For me, remember, we've got JD, the Dancing Bear, John Doherty, doing the prep on Friday. Always good to see him. I'll be watching wherever I am. And always good to see my good friend, JD. So, all right. We're going to jump into the charts here. All right. There's a lot of good suggestions here. I can't put everybody up there behind me. First concert, Deep Purple and Humble Pie. Yes, Rick. I was, I think, 2 when you went to those concerts. All right, let's take a look into these charts, shall we? So S&P's looking back towards those lows that we put in earlier this week, taking us back towards the yearly low, the 2023 low, which we did put in on that weekly kickoff low here. It was still the March contract, the June contract weekly kickoff low, 38.39. Where did we get to here? 38.39 quarter, so even closer in the June contract. So looking at this morning, it was kind of appearing that the market was falling into at least 3 days of balance, and I think we're still kind of in that area of balance. We lost 35,000 in open interest yesterday, but again, that's very difficult to read because it was switch day. I mean, the volume and open interest is split between the 2 front months, so it's very difficult to read. So looking at this, I mean, we're kind of nearing the lower extreme of the 3-day range that we've really been in all week. It's been a volatile range. However, it has been range bound as far as the way I'm seeing it for the daily chart here, okay? So I'm going to be using balance breakout rules this morning. Let's take a look at the 30 here. So, I mean, our overnight inventory obviously is short. Here's the 3-day range that I'm talking about. We got to the top of the range yesterday. We may have continued that upside move. It was one-time framing higher really very steadily yesterday. And the market got some different news from the Black Sea, so things changed a little bit. It was a really good close. Most of the night, the market was very tight to settlement, and we've got a whole bunch of overnight inventory that has taken price lower with a gap nearing the extreme of the low of the week here. So I'm going to be looking at this as gap rules to start with. If we can't close the gap relatively early, I'll look for the market to give us another chance down to weekly kickoff low here. Right, so the upper extreme of balance I'm looking at is yesterday's high, 39.71. The lower end of the balance area that we're in, where we left excess on Monday, is 38.39, the weekly kickoff low. So are the profiles going to tell us anything? Let me find it here first. There we go. All righty. So a normal variation type day, which I would say was extreme to the upside, not a very strong high, a stronger excess low, which we are now opening below, indicating potential acceptance below that level. Now our excess low here is going to be largely in play this morning. Again, if we can't close this gap relatively early, I'll look for another visit down to this important inflection level of weekly kickoff low 38.39. Yesterday, neither the high or the low were the extreme of the initial balance here in the S&Ps. The prominent point of control on Tuesday, Monday, that is, was revisited. It is also telling us that the market is kind of using up its ability to facilitate trade in this area, so it makes sense to me that the market is now seeking different levels to facilitate that trade. Is it going to be lower? Are we going to come back into range? The value area special situation play comes into play anytime we open outside of the previous day's range completely. Which would mean we'd have to come back into range, accept back inside value, and then trade to the other extreme of value. Looking at that as kind of a low probability trade, but now that I've said that, it probably increases the possibilities of it, right? Let's take a look at crude oil, which is just opened up here with some pretty serious short inventory. Excuse me. My goodness, my apologies. So if we look at this, okay, we've been putting in lower highs since what? Really since here. That's March of 22. Well, it's March of 23. We're still putting in lower highs. Now we're putting in another lower low here. This swing low back here is going to be somewhat targeted, and that swing low is 66.12. The swing low below that, 62.43. Take a look at the daily, a little shorter time frame here. We've been stuck in balance for about 3 months. We've broken out of that balance. Balance to break out rules. Acceptance outside of the balance area you go with. Obviously, we're below the balance area. We're going with to the short side. If we are late to the party, it's going to complicate things for us in the day time frame. Here's the weekly kickoff low. Found support Monday. Resistance yesterday. Continuation today. We lost 3,700 in open interest, but tomorrow is probably going to be switch day. We're going to look at the volume tomorrow morning. If the May volume is equal to or close to equal to or greater than the April contract, we'll be looking at the May contract tomorrow. So yet another market and rollover we've got going on, a few of them, including gold as well, which we'll look at shortly. So open interest and volume blurry in all of those markets. So we're going to be trading what we see. We've got the market opening with a gap. If we can't close the gap relatively early, it makes perfect sense to me for this market to continue to push down to possibly that 66.12 level, that swing low from a year ago. It's almost halfway there in the range today. We'll see. Gotta just manage risk, and getting into a move that is already underway in a directional way has always been challenging for me. It's always been a hard thing to do. Don't fall into what many short time frame newer retail traders do, is if you can't sell it, well, you have to buy it. And then you get run over and you get run over and you get run over. It's one of the biggest mistakes that retail traders make, is if we can't sell it down here, we're going to have to find a place to buy it. and we buy it and we buy it and we buy it and we get run over. So don't fall into that. Don't fight a directional market. Some people call it catching a knife. Don't do it. You'll be better off if you're patient and wait for something as the day goes on, some sort of structure to lean on to give you that opportunity. Don't FOMO into a directional market. That said, that'll be the low. Watch. All right. We had a late spike yesterday. The base of the late spike, which is where the market leaves balance, is right here. To be precise, 72.27 is the base of the late spike. So what are the late spike rules? Well, opening below a late spike is the highest probability of acceptance of lower pricing. Another reason I don't want to buy this market. I want to look for opportunities to sell it unless something changes, which something can change. That's not a problem. ACH, recognizing it is the difficult part. One thing about this profile is we have a low excess high. We have another low excess high. So it's kind of iffy as to what kind of time frame the market is in moving this market lower. We know we're in rollover. That should mean the longer time frame traders are more focused on getting a cheap rollover than anything else. So there's some cognitive dissonance in this. Trading rollover always creates cognitive dissonance. Okay? Neither extreme of the initial balance was the high or the low yesterday. Expanding markets. NASDAQ. The cheery NASDAQ is, again, holding up much better than the other equity indices. We are in range. We are range bound. We are miles away from the extreme low here put in on Monday. We're miles away from the extreme high from last week's high. We're really holding up well. Well, there's no banks in the NASDAQ, so why wouldn't it? We added 21,000 in open interest again, but don't let that fool you. It's rollover. Switch day was yesterday. Still a lot of volume and open interest switching back and forth between the two front months. Very difficult to read. Again, the extremes, Monday's low. We didn't even get to weekly kickoff low in the NASDAQ. We got straight to it on Monday. Last week's high, the extreme. So we're looking at a market that's much more, it's presenting much more as a short time frame controlled market, which is good for the rollover people, maybe not so much for us. Take a look at the 30-minute here. We've got the market opening with short overnight inventory. We were probably going to be opening with a gap, so I'm going to try and use gap rules. If we do open outside of the range from yesterday, we could feasibly get the value area special situation play to bring us back up to yesterday's value area high, or we could see this market continue to look lower in search of buyers, perhaps down near last week's low. No gaps here. We've got one little point of control that's really within reach if it's not a weekly kickoff level. Stay patient today in the NASDAQ. I think the market is seeing that there's probably going to be better trade locations as the day goes on. Look at yesterday. We opened, I think, with a slight gap in the S&Ps. We looked lower into the range from the previous day, which is probably the best trade location for the day. But then we got another good trade location up here at the high and another good trade location back here down at the low. And then we popped. So even though the market kind of opened out of balance, the better trade locations came as the days went on. I think we may be in that kind of a situation as well here in the NASDAQ. The S&Ps and the NASDAQ and the Dow are so related as they're the same asset, but they're different as far as their personality is concerned. They're like kids. You can have 3 kids. They can come from the same parents, but they can all have their own personality. And it's so true about the equities. Gold pushing to the upside again yet today. We've got a breakout. We got a market state change. We got a breakout above balance. We got a breakout above weekly kickoff high. We had a pullback yesterday, which lost 8,000 in open interest. It is coming into rollover, but I'm looking at this as a long liquidation. Long liquidation takes selling power out of the marketplace, and the market is continuing to push to the upside. That pullback yesterday is actually going to be, I think, proving to be good for the upside auction. Overnight, we had support down near weekly kickoff low. The dollar is higher today, and so is gold. What's going on there? Is it technical? So here it is. Gold pushed to the upside. A little sloppy structure down here. 2 days, well, one day in balance. Holding above weekly kickoff high, finding buyers. Overnight inventory is long. For the time being, they're continuing to get paid. We've got a naked point of control up here. We've got space, a lot of space above if this market decides to continue to rally. 1960s to me seems perfectly reasonable as far as space is concerned to the upside. That's going to put us all the way up here. It's not that far away, actually. Seems like it is, but it isn't. TPO chart. Initial balance, the high of the session. Normal variation day, a little bit extreme. Points of control are above the center line and a relatively prominent point of control. We spent 2 days facilitating trade in this area. The market is now seeking new levels to facilitate trade and bring in new business, new volume. Is it doing a good job? Is it doing a good job? So far, with the gap and continuation, so far it's doing a good job. What about the euro? Whack! The euro got whacked. So, what did this? Well, we know the dollar's strong, but there was a French CPI and Eurozone industrial production that both were really hot. Really hot. Weekly kickoff high holds 3 days in a row as resistance. We were unable to exhaust the sellers up there. We added 500 in open interest on a doji. That seems to make sense. A lot of indecision up there. So there's 1, 2, 3 days of trying to get up above there. Look at this market. Look how sloppy it was. Naked points of control almost every day on the way up. This pullback almost had to happen. Weekly kickoff high to weekly kickoff low in 1 day. It took 1, 2, 3, 4 days to get there. It's taking it all back in 1 day. This is one of those situations where if you can't sell it, you have to buy it. You'd get run over, you'd get run over, you'd get run over, you'd get run over, you get run over, you get run over. Look for structure before looking for any type of long here. And that structure may come in the form of last week's low, weekly kickoff low, and the fact that we've traded through all these naked points of control. Here's the TPO chart. A nice tail on the bottom here. Week high, something changed. We had a normal trading day yesterday in the fact that the initial balance was the extreme on both sides of the range yesterday. So here's all those naked points of control. Gap, unlikely to get filled. And don't try and pick a bottom in this. It's been a big move to the downside. If I'm going to pick a bottom, I need some sort of decent structure to lean on. we may be creating that very thing that I'm looking for as we speak. But I want us going to be patient. It may cost me in trade location, but before I look for a long, I need a solid way to limit the risk on that. Alrighty, let's go to the 10-year. My goodness, I don't know what's going on here. Excuse me. So we got rates lower, 3.4 right now in the 10-year. Makes sense, right? Upside rates are probably likely to slow down, so it makes again sense that we're seeing treasuries pushing higher. We lost 5,100 in open interest yesterday. That's healthy to the upside auction. We needed a pullback. That pullback took longs out of the market. That takes selling power out of the marketplace. And now we're seeing those liquidating longs yesterday trying to get back in. We certainly see space up to these swing highs up here. Take a look at the 30. So there was earlier today the possibility of falling into repair between yesterday's range and the day before's range. What we did yesterday in the 10-year was almost 100% repair. We opened in the gap. We closed the gap to the upside. We closed the gap to the downside. That's repair. Now the market is prepared to move to new levels. Don't fight. Don't fight. I don't know how many times I can say that and continue to do it myself. Don't fight. If you can't buy it on a move up like this, be patient looking for a way to sell it, because it'll run you over and over again. Don't fight directional markets. I'm going to come through your screen and smack you if I find out you've fought a directional market. And then the worst thing that could happen is you actually pick a bottom and you have a big day and you think the next time that you're going to be able to do that again, and you pick the bottom 8 times and every one of them's a loss. You don't want to reinforce bad behavior. So gap, we're trading the gap rules. We couldn't close the gap. We look for opportunities to buy weakness unless something changes. And these markets seem to be changing every 5 minutes, so be careful. And the natural gas. Still sort of stuck in that sticky area. We're getting some sellers into this market right here. We lost 2,900 in open interest, but the rollover is 1 week behind crude oil. So we are falling into rollover, which is, most see it in the volume. Volume is already falling off in the April contract. Here's the 30-minute chart. We were going to open with a gap. We opened with a gap. We were unable. Well, we did close the gap almost to the tick. Sometimes that's a really sweet spot. It gives you the opportunity to limit risk, and we see the market trying to push back lower again. We've got nothing down below as far as weak structure. But if we were to kind of squeeze this in like this, balance high, balance low, short time frame control, coming into rollover, we're going to be looking for opportunities at the low from this week or the high from this week before I do anything in the middle. And don't fight. I feel like I'm a little kid in the back seat in the way back of my parents' station wagon, and I'm fighting with my brothers, and my mom is yelling, "Stop fighting! Don't fight!" And my dad says, "Don't make me stop this car. Don't make me come back there." Don't fight directional markets. Don't fight. What time is it? I got lost here. All right. So, I'm going to go back and see what's going on in the S&Ps here. We got about 10 minutes before the open. We've kind of found a nice little short time frame consolidation area on the lows here. So this might be something that might be interesting for us. Are you in the Wayback Machine, Mr. Peabody? Ground Zero. Are we there yet? My dad always used to say, yeah, right around the corner. Right around the corner, even if it was another 6 hours. Yes, the trend this morning is don't fight trending markets. It is so difficult to do this, and so we got to stay calm. We got to make sure that the little knowledgeable trader in our brain is fully awake and engaged in what we're doing. And one way to do that is take a deep breath. Stay humble, grateful, creative, and centered in your trading today. You can have a good trading day. It's all up to you. You can have a bad trading day too. And that's all up to you as well. So looking forward to seeing you for group coaching and Make Hogue Money and everything else today. And then tomorrow morning's prep, Make Hogue Money, and then I'm done for the week. Tomorrow, the day before St. Patrick's Day, is my 27th wedding anniversary with my lovely wife, Donna. It seems like it's only been 47 years. Just kidding. I love my wife, and we've been very happy, and we are going to take a little time and have a little getaway. Maybe we'll get some things done around the house while we're out of town, huh? So get out there and profit today. I'll see you at 12:30 for group coaching and everything after. Stay patient. Don't try and catch a falling knife. I'm going to do the same. I'm going to try and not to fight a directional market and see if I can't find a way into something good. Something tells me we're into something good. Trade well today. Get out there and profit, and we'll see you later on.